Hey everybody, Kevin Shortle here again with another episode for you of the Real Estate Without Renters podcast. Really appreciate you listening to the show. And if you like the show, please indicate that. Give us a nice five-star rating there, maybe some comments, and share it with a friend. Really do appreciate it. It enables us to do and continue to do more of these, bringing you quality podcast on real estate and real estate notes all together and bring on some special guests and some sponsorships. So we really do appreciate you all doing that and sharing it as a friend. If you belong to a real estate investment club, anything like that, Facebook group, I sure appreciate a shout out to them to gain some more listeners. That would be awesome. I'm joined also by Dwayne Gibbs. You may recognize Dwayne from our Water Cooler Wednesdays that we do. The Water Cooler Wednesdays, just a half hour to 40-minute program that we do every Wednesday. It is live broadcast on Facebook and then reproduced on the YouTube channel and posted out on the podcast as well. So some of you should be familiar with Dwayne. Hopefully all of you will be very soon. So before I introduce our special guest, Wendy Sweet here, Dwayne, how are you? Well, we can't hear you, buddy.
He's
I don't know if
silent.
it's your audio there turned off
There we
or
go. There we
there you
go.
go. Yeah, you got to have that on.
How's it going?
Good. Hey, I know we've got specials running all the time. You're talking with investors, all the time, looking to get into the
Yes.
note space and everything. So just a quick what you do and how people can reach out to you, and then we get on.
Yeah. Yeah, appreciate that. So the best way to reach us overall, I know, we always give free gifts away to people that come on board to your website. And so right now, if you go to learn.kevinshortel.com, just go in, register, and what's going to happen is you're going to fill out a questionnaire. That questionnaire is going to help us give you and reach out to you for more information, as well as you received. Kevin put together a 4 series video breaking down notes, what's important, what to look for, how to look at assets and be able to determine what's a good deal. So it's free. Just go to learn at kevinshortel.com and
I
you're all
believe that's learn.kevinshortel.com.
learn dot
All
at
right. Learn
kevinshortel.com.
dot
Yes.
kevinshortel.com. Don't forget it's Shortle. Thanks, Dwayne, for that. All right. Well, we have a special guest here today, and one of the things that you will notice from her bio when you read through this, but for the podcast's sake, with her bio is filled with experience not only in real estate and real estate notes, but also lending. And I really, really like that. I think real estate investors who just focus on real estate without the peripherals, without understanding property renovations, without understanding the lending side of the business, the note side of the business, I think they go in there less prepared than a well-rounded investor. Because if you're well-rounded, I think it just opens you up to more opportunities that are everywhere. I get pigeonholed a lot, Wendy, being notes, real estate notes. Everybody knows me from that, and I have to remind people. I do focus on real estate notes, but I also come from an extensive background of flipping properties, renovating properties, did the landlord, did the money lending. And I think all of that experience really is what enables you to become an expert in the field that you are. So your background is just as diverse, right?
Well, it is diverse. I started out as a mortgage broker for investors only. I call myself a recovering mortgage broker. I did conventional loans only for investors only. It was the hardest one to learn, the hardest lending thing to learn if you were a mortgage broker. Owner occupied was easy, but investor stuff was really difficult. Lots of paperwork and red tape and so most mortgage brokers, and I can say this because I was one, are lazy and they're going to want to pick the low-hanging fruit. Well, to me, the low-hanging fruit were the people that nobody else was going after. So that's why I learned that investor side like I did, and it was such a blessing to learn it because that's what really catapulted me into understanding how to underwrite a note, how to create a note, how to look at the whole deal because I understood the investing side.
Yeah, and I bet you, like me, back a little little back in time in real estate, it was before all the internet and before all the fancy software and everything. You really had to learn it, I think, right?
Yes.
You had to be physically able to go in there, look at documents, create documents, and do everything. And I think, in hindsight, such a blessing because that's when it really gets integrated into that. So you started there. Now, of course, you have several different companies. Your principal at Sweet Carolina Houses, Carolina Capital Management, short-term rental. So you've diversified within all this. But starting on the lending side, it seems like you've come back to that, but there was a journey there, right? You got into doing the properties and the hard work yourself, right?
Well, I never stopped lending. That's always been my bread and butter, creating
Okay.
notes and lending. But
Okay.
when you're lending, you can't help but all these other deals kind of fall in your lap. And you have to, you can't say no to everything. There are some deals that are just so great, you have to give it a shot. One of
Mhm.
the things that, when I first started lending as a mortgage broker, is I had to, part of what I was doing to pick up clients was to be able to go to every single real estate investor association meeting in North and South Carolina. So I was in 9 different meetings a month.
Wow.
And I was just slammed into learning all about real estate, every part of real estate, short sales, rehabbing, renting. And then is it a single family, 1 to 4 units, multifamily? Are you looking for a fix and flip, mobile homes on land, mobile home parks? I mean, everything was covered. So you couldn't help but learn as much as possible. And that only makes you a better lender or note creator or note buyer because you understand how everything works. And of
Mhm.
course, everybody suffers a little bit from that shiny object syndrome.
Sure.
So you have to try your hand at all the things you do. And I will tell you this. I've got self-storage facilities too. I love being in the real estate business, but I wouldn't trade any of it for my notes. It's there's nothing better than getting that monthly payment every month and not having to deal with the trash, the tenants, the toilets, the just the liability that goes along with it.
Yeah.
The stories, the dog ate my homework. I mean, I've heard them all.
Yeah.
And you can't trade the two. You just can't trade it.
Yeah, I agree with you, and I've again being doing a lot of things in real estate as well. It just kept bringing me back, it just kept bringing me back to notes, and it's like if you really examine it, and I at one point in time, and I don't remember, Dwayne, these are videos are somewhere. I started doing a series on that, notes versus, like notes versus rehab properties, notes versus rentals, notes versus stock market, just kind of going through it. And part of it was a self-serving exercise to convince myself. It's like, hey, this is a great part of real estate. Sure, if you see other opportunities, maybe we'll take a jump at some of those. But boy, at the end of the day, I think you're right. I think that side of it is great. And of course, part of being the paper side is what you're doing, which is originating funds as well. So now you've grown in the Carolinas. So Dwayne's up there in the Carolinas as well, and you've grown. You probably do your business there, but you've grown out to the southeast for a bit as well. So primary focus is still on the lending and building your note portfolio. So lending, bad paraphrasing, but daytime job, but notes is kind of the wealth builder or the
Well,
income creator
we
for you.
create notes.
Yeah.
So we create notes every day and
Mm,
we sell the notes that we create.
mhm.
And the thing, when I train people about lending, because a lot of people want to try their hand at lending, going ahead and creating that note to begin with, I always tell them if you understand notes and how they work, you can make really any deal in real estate work for you.
Yeah.
There's nothing that can come across your desk that you can't figure out how to make it work if you understand notes.
Yeah.
There's so many different options. And I was, we were at that the Note Expo that we saw each other at a few weeks ago in Nashville.
Diversified mortgage. Yeah. Hmm.
And I had the
DME
yeah,
DME conference in
Yeah.
Nashville.
Yes. And
Yeah.
one of the things I had a little teaching gig. You had one as well. And all I taught was creating short-term notes or buying short-term notes and what they were like for investors, because we only lend to investors. And I was surprised at the amount of people who were not so much educated about short term and how it works and lending to investors versus, or buying a note for investors versus buying the note for mom and pop, for Joe and Nancy who want to
Right,
own their own home, and you seller finance the note or however that note's come together.
right.
Surprised at how many people were interested in, and surprised at the short term options that are out there. And it's just like it is just like the stock market. When you're buying notes, are you going to just buy one, or do you want to diversify?
Hmm.
Do you want to do a short-term note, a long-term note, owner occupied, non-owner occupied? And where do you want that note to be? And does that really matter where it is? There's so many different things that you can think about when you're doing just the short-term end. It's a whole nother, it's a completely different I guess section of note investing that you can take on, because a lot of people don't consider the short term. And now, one of the things I love so much about doing short term versus a longer term note is, and I know there's great reasons to do long term notes, but I like the short term because we can change with the market. Like, I'm
Hmm.
not stuck in a really low interest rate or any particular low interest rate for, 3 years, 5 years, 10 years, 20 years, whatever that is. Mine are 6 to 12 months.
Hmm.
So we're in the note for just a short period of time. And as the market, especially these days with the way the markets are changing, I don't want to be stuck in a short-term note, I mean, a low note for a long term, when I can turn around and get a much higher interest rate for a short term, get it paid off, and change that interest rate as things are going on around us. And Lord knows it's been a little bit crazy here lately
Yeah, the
to
changes in the
begin
markets.
with.
And again, I'm talking with Wendy Sweet of Carolina Capital Management. Something that you mentioned earlier, I think is important as well. Is one of the things I run into all the time is real estate investors who now understand, hey, I can create a note. And then they create a note and they go to sell it. And then they get upset at note investors because their discounts are so heavy. And it's like, no, 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 no. You created a garbage note, so you're getting garbage offers for it. I mean, you've got to learn how to create a note from the eyes of somebody who's going to buy it. So back to that point, and if you're not creating good sellable notes, well, then it almost doesn't matter if it's short term or long term. You're kind of stuck with it, unless you're willing to sell at a big discount. So there's definitely a skill involved with that. And if you notice that DME, which is a collection of these investors that are missing that part of their education just on short term versus long term, you can imagine the same thing with investors who just don't think in terms of creating a good note. They think in terms of creating the problem that they have right in front of them.
I'm
Sometimes
really
that's just not the right type of thing to do for long term. Yeah.
And I'm really glad that you brought that up, because people will say, well, if you're in a short-term note, you're 12 months, how are you going to discount that note to get it sold? Here's the thing about short-term notes. It's really if you're creating a short-term note, you're really making your money off of the points up front. That's
Mhm.
where you're making your money. You're not
Yeah.
really making it off the interest rate because it's so short term.
Right.
So you're really not selling it at a discount. You're selling it at par. When we
Yeah.
sell notes, we sell them at par
Yeah.
all day long. And so what we're saying is you're going to get this return, 11.99%, 12.99%, whatever the rate is for the
Hmm.
next 12 to 18 months,
Hmm.
whatever the term is. So it serves a different purpose. Everybody has a goal of what they want to do, whatever that package is that they're looking to invest in. And
Hmm.
we all know we're all a little bit older than 50, so we know that as we change in our lives and our goals change in our lives, our investing goals change too. And they're gonna be um, different than they were when we were 30.
Yeah.
So, the pie chart's going to be a little bit different too. And you just want to be able to diversify and invest in stuff that works for you for whatever your goal is right then. And I think a lot of people miss that thought pattern when they're going in to create, oh, I buy notes. Oh, you buy notes? Really great. What are your goals? Do they really think about, well, I want to have 10 notes? Okay, great. But what do they need to look like? What do you
Yeah.
want that return to be? How far ahead are you thinking?
What's your risk tolerance? And yeah,
Yeah,
yeah. What kind of collateral are you comfortable with? 100%. That every consulting student I take on, that is the first thing that we do. It's like, okay, let's figure it out and let's make sure it's realistic, right? You had
exactly.
some people coming in with these, expectations like, let me bring you down to reality, and maybe we can get up here on, advanced techniques, but let's get you, situated in reality because reality is it's good in this market. We make money whether it's a good market or a good economy, bad economy. It just, again, to your point, we have to be adaptable enough to move around. How did you end up meeting Dwayne? Because I know you and Dwayne go back a bit too. Was that when you were first getting into not the lending side? I guess it was more on the note creation
It was
or
it was
holding
all through
or the
note
buying
school.
notes.
It was
Hmm.
all through note school. In fact, Kevin, you did my first note school class in Atlanta, Georgia. Oh my gosh.
Yeah, I did the 3-day training.
Yes, and
Yeah.
I'm thinking it was in, could it be oh six?
I'm not gonna know. Yeah, Dwayne and I were going out, what, 50 weeks a year, 48 weeks
Oh
a year.
yeah,
So yeah,
we've gone out a bunch, and
yeah,
so
You
I
guys
think
were
the first time I
traveling
met you,
dudes.
Wendy, was at I think it was at a Pete Young class, possibly in South Carolina. Um,
Maybe it was. It
I
could
think it
have
was
been.
Pete. Yeah, I think we did
And in
something in
Greenville?
Atlanta. What's that?
In Greenville, maybe?
Yeah, maybe so. Um, and yeah, I would say that's probably about '06, and that's when we met Larry and you
Yeah.
and kind of introduced you more to different ways of how to invest in the note business.
Yeah.
And I
Oh,
think
yeah.
that, when you look at things not now, but you talked about when we were younger and you look back of how to do things, that was really exciting. But now looking back of how far you've been to where you're at now, I mean, you didn't stay just one dimensional. You've changed, you've evolved, you've had to change so many different ways of how you look at the investing side because the market changes. And knowing that you have to change and the market's not going to change for you, I think that allows different layers of our investing style.
That's so true. I'm always surprised at the people who just pick one little thing and go after it. Now you should in the beginning. That's the
yeah,
way you should do is be
yeah,
focused
yeah,
on what you need to do. Learn that and then move on to the next thing. You should be focused.
yeah,
But I'm always surprised at the people who kind of stay in the same lane they've always been in, that there's a lot to be said for making sure that you diversify in every part of investing that you do because the market's going to change around you. I've been investing since 2001,
mhm,
and boy, have I seen crazy stuff happen.
yeah.
And you have to be ready for it. And I'm also surprised at the people who claim they've never lost money investing. Um, you show me somebody that says that, and I'll show you a liar
Mhm.
or somebody who hasn't done enough. Because, there's a risk in
Sure.
everything that we do. And you have to be aware of that
Yeah.
and
I,
make
I
sure
li-
you're making decisions based on that.
I like that too because you're also managing a real estate fund now. And I know a lot of people who get involved in the creative space in real estate, they gravitate towards funds. They want to build a fund. And I get it. There's an attraction there. A lot of them don't understand how much effort and how much work it is, number one. And number two, when I see people who have been in the business for 2, 3 years and now they're putting a fund together, I kind of cringe. I just go like,
Very.
you haven't seen the cycles, you haven't seen what's going on, versus someone like yourself who, yeah, you saw the big up, you saw the big crash down, you saw the recovery, you saw the ripple through COVID. I mean, that means a lot. And I think, too many people look at funds and they go, oh, well, this fund's paying me up to 12%, up to, and all this. And I'm like, look at the management,
Yes.
at who's running it. Look at the experience and how long they've been around in the business. And you're right. I mean, anybody who was in real estate full time lost money in the crash somewhere or
Mm,
another. I mean, you,
yes.
you just had to, and because it happened that the writing was on the wall, but it happened that quick. And so I agree with it that as well. But as to the fund, again, it is important to have an experienced team. So you run that with your brother Bill.
I do. And we were in the business 14 years before we started our fund.
Mhm.
So we actually were, of course, lending, doing hard money loans since 2001. And then in 2012, he became my partner. We were always doing stuff separately, but he became my partner in 2012. And at that time, we had about $20 million of other people's self-directed IRA money that we were lending out for people.
Mhm.
And that's what really, after 2 years of putting the puzzles together, we said, you know what, we got to have a fund
A
and
little
got
easier to manage from
going.
that standpoint. Yeah.
Yeah, it was getting a little crazy,
Yeah,
but
you can make decisions in the fund without, yeah, having everybody have to kick
exactly,
in. Yeah,
exactly. But the thing is it's a lot of responsibility
it is.
when you take on other people's money like that. It's so much more comfortable to do it for your own benefit. But when you're lending other people's money, it's it's a lot more pressure. You got to really, really watch your P's and Q's and just making sure that you're making the best decisions that you can possibly make. And even in those cases when you're doing everything right, there's still a risk that you have to consider on everything you do.
Yeah.
I think people don't they probably don't use the right formulas. And when I say I use a formula, my formula always uses worst case scenario numbers.
Mhm.
When I'm running a deal, running a scenario, whatever that is, I'm going to use the worst case scenario numbers. And if it's a deal when I'm using those numbers, then I'm good.
Yeah. Yeah, I think
So
I've
many
said that.
people, look at, oh, we could do this and we could do that. Yeah, you could, but you don't know what's going on around you. There's so many things you have no control over.
Yeah. And I,
It's
I
funny how
I've said that in every single training I've ever done. We always hope for best, but prepare for worst. And if you're making
Hmm.
money either way, then you're good. Proceed. But yeah, if you're not looking, yeah, you can't go in all rosy on on every deal and just think it's all going to work out because just sometimes they're not. Sorry, Dwayne, you were going to say something.
No, I was just going to say it's funny how everybody has an opinion until their money goes into it and an expectation is completely changed. All of a sudden, their
Hmm.
money's on the line, and now, oh well, I need to look at it differently versus the way that I used to because now I have some skin in the game, and so
Hmm.
that mindset you see shift all the time.
Yeah, and there's a difference between buying individual notes and running a fund. I mean, and that's why, again, well-rounded experience pays off dramatically on that. I'd much rather see that in a management team than somebody who's just been focused on one thing a couple of years, and now they're like, hey, I can put more capital together because it just you shift from this mentality of I'll look and keep looking until I find the right note for me to I can't sit with money on the sidelines for too long. I've got to get them into play, but I also don't want to buy something just for the sake of buying it and have it go bad and we're not making money. So there's a whole different new dynamic that comes in there, especially when you have to run, multiple millions of dollars in there. So there's there's a lot to it, you
That's
know.
a lot of pressure. I give you a lot of credit, Wendy, because I
Yeah,
mean, I would want to invest with someone that has 13, 14 years of
yeah,
skin in the game before I would invest my money with them versus like you said earlier, you see somebody that's been in it for 2 years and they think that these funds make so much money, as you know, you don't make as much as you think you do, as much as you think you are. So kudos to you. That's a big responsibility.
Well,
yeah.
thank you. I appreciate that, and I absolutely love what I do. And one of the things that I really like about how we lend in particular is we we have notes in our fund. That's what we have. That's what we're doing. There are some funds that you can invest in, and they're all worth looking at. They're all worth looking at. But there are some funds that you can invest in that are project centered. Like you might invest in a fund that's building an apartment complex or a fund that's developing a neighborhood or whatever it is. So, what that means is if that's what that fund is doing, that one project is what's carrying you.
Mm,
And a lot of people here lately have been investing in funds that are either buying multifamily or they're building multifamily. And we all know what's been happening with multifamily here lately. You've seen a lot of capital calls, a lot of things have changed over the past few years of what they look like. So if that's what you're invested in, you're stuck with that one deal. I like being diversified in a bunch of different notes because if one note goes bad, there's 185 notes in there, you're not going to feel a blip on that.
right,
Which is
right,
same if you're buying individual notes too, right? You don't want to just buy one, you want to have 10.
right, right. Yeah. And so, um, somebody's looking to borrow money. What kind of properties? What's your process? How would people contact you if somebody's looking for a loan?
Oh, that's so nice. So we lend in the Southeast,
Mhm.
and we lend primarily to fix and flip and new construction. That's really what our primary deal is. We do some small commercial stuff under, $1.5 million, smaller stuff. Like we like strip centers with no anchor store, stuff you can't get done on Amazon, like your nails and your hair. Those are things that are going to be in these strip centers. So we like doing those as well. But mostly we do fix and flip houses all over the Southeast. And you can easily go to our website, carolinahardmoney.com, and there's videos and all kinds of explanations on how the loans work and how you can get qualified for it.
Great. And what type of properties?
So we prefer 1 to 4
Okay.
single family units.
Residential, single
Yeah.
family. Great.
Hmm.
And looking to rehab. Any kind of guidelines or what should people be prepared to deliver for you? Do you want like a whole proposal put together? An outline two pager? What's a smart way for people
Well,
to approach a
those
lender
are
like
those
yourself?
are great questions, but the application that you go through, it's a little short term, a short application that takes you about 3 minutes that asks you all the questions that we need to know.
Right.
But really, and I'm surprised at the people that don't know this when they're searching for loans, when you're trying to get a hard money loan, there's just a couple things you need to know. What's the after repaired value?
Hmm.
What's it going to cost to fix it up? It's that simple. You'd
Yeah.
be surprised at how many people don't know that.
Yeah.
But, hard money lenders lend up to 70%, about 70% of what the after repaired value are.
Right.
Value is everything's based on that after repaired value. Whether
Mhm.
you're planning on keeping it as a rental or not,
Right.
everything's based on that after repaired value. So you have to know what that is. And then
Hmm.
you also have to know what it's going to cost to fix it up because that determines what you're going to pay for the house.
Yeah.
So so those three things are really important. After repaired value, what's it going to cost to fix it up? Then we know what you can pay for it.
Right. And as a real estate investor, you should also know time-wise what's it's going to cost you to rehab, So there's a lot more that the real estate investor should know that you don't necessarily have to pass on to the lender if they're just looking for specifics. But the 100%, I love it when investors come prepared. They know what you're looking for. They know what they're supposed to have. I like seeing proof of all that sort of stuff. Well, to your point, there's a lot of investors that don't realize they could hire, because everybody does stuff remotely. They can hire a real estate agent to do an after repaired value assessment, not
It's called a
not just as
BPO.
is. Yeah, the broker
Right.
price opinion, they can do it with an after repaired value versus current condition, and a lot of people don't know they can do that either. I imagine you have a lot of repeat
Oh,
business,
yeah.
and once
That's
everybody gets
probably 70% of our business is repeat.
yeah.
And we like that. They get to know us, we get to know them. We have a really good relationship. Draws
Hmm.
are released in an after you've done the work fashion, just like a regular construction loan. Takes about 48 hours to get that inspection done and get that money in your bank account. So people think that when they go to get a hard money loan that it doesn't matter what their credit scores are or how much money they have in the bank. With us, that's not true. We care about your credit score and we care about how much money you have in the bank because we'd like our money paid back. But
Hmm.
there are companies out there that do what's called asset-based lending. They don't care about what your credit score is and they don't care how much money you have in the bank. But
Hmm.
you're going to pay a lot more money for that kind of a loan. But they're there to get the job done. So, but the thing is too, people need to understand when you go to a company like that to get a loan, you better know what you're doing because they're not going to talk you out of it. They want your house.
Hmm. Yeah. Yeah, they're not you're in relationship lending,
That's right.
you want to have a good, successful transaction, as does the borrower, and let's do another one because then everybody's making money. And someone who doesn't qualify somebody, they're like, all right, well, they do this deal or they don't. If they do, maybe they'll do business again. If not, we're going to end up with their house and they probably won't do, but it's just a whole
That's
different,
well, they won't be able to
yeah,
now.
it's a whole
That
different
now they've
mindset.
got a foreclosure on their
Yeah,
record, so it's going to
yeah,
be hard for them to get a loan. And we want everybody to make. I'd love to do everybody's loan. I can't
yeah.
do that if you're out of business. So I'm going to do everything I can to make sure that you've done your homework and that I can help drag you across the finish line, get it done right, and make money. And now you can continue to do it and grow your business. That's what it's all about.
Yeah, and we've got some mutual friends up there, Noah and Christy. Mobile homes, you're okay with those as well?
Yes,
Manufactured
we are.
mobile homes?
Mobile homes on land. In
Yeah,
fact, that's probably um, one of my favorite things to do outside of lending.
She
yeah.
may know them. I don't. She may know them, Kevin.
Oh, I thought you did maybe. Okay, all right. Yeah, maybe different circles, but yeah, I've got some friends I trained in the business years ago that that's their specialty is the mobile homes, manufactured homes in the Carolinas. I'll introduce you guys if you haven't met.
Oh, that would be great. And I love doing it. In fact, I'm
Yeah,
closing on my third lot
yeah,
this month on Friday.
yeah. And
So
these are outside of parks?
I don't buy in parks.
Yeah,
And that's not bad either. A lot of people do
right.
that
It's a
too.
niche. Yeah.
Not my thing, but
So
um,
she's talking to everybody about, somebody who buys in Carolinas, it's popular. Other spots of the country, it is as well. Florida, Arizona, that sort of thing. And, somebody buys a plot of land and they put a manufactured home out there and they make that a part of the real property, instead of a vehicle. And
right.
those can be really, really good investments.
And you
And
can sell or finance it, Kevin, and then turn
Yes.
around and sell a portion of that note so I can get my cash back
yeah,
and go do another one.
yeah.
You know? I love it.
You got it. Yeah. Again, it's just understanding all the moving parts here. Self-storage, how's that been going for you?
So self-storage has been stagnant for about at least the past 2 years. It's
Really?
been very stagnant.
Hmm.
People have a love affair of their stuff. And it amazes me. I have two facilities, one in Missouri and one in Tennessee. And I'm amazed, when, we have to take a self-storage unit back and kick people out because they haven't paid. You open it up and they've been spending $125 a month to keep grandma's wrapping paper
Yeah.
in the back. with, old hangers and socks. I mean,
Yeah.
what are you thinking? People, it just amazes me what people will pay for storage. I had one woman who had been with we bought this unit, so we didn't own it for 17 years, but she had been renting for 17 years. 17 years. You know how much money that is?
Yeah.
It's just crazy. It's crazy. But lately, self-storage has been um slow.
Yeah.
When you've got I know that people refuse to believe that we've actually been in a recession. We can't say the R word, right? We're not really in a recession. It's just an illusion. But when you're in a situation like that, those are the people that suffer the most from that are the ones that have been renting storage space.
Yeah.
So that's what's gonna hurt the most. But we're seeing it start to pick up a little bit, which we're real happy about. But they make
Yeah.
great tax deductions too.
Yeah, of course, seller or self-storage became a big, as you mentioned earlier, flashy object that a lot of people go, there's a lot more to it than you realize. You got
It
to better
really
know your
is.
numbers, you better know the laws, you better know, you've got to have management in place. There's a lot more to that as always. Again, that kind of brings back, I think, to a degree, not that notes are complex, but there, in a way, there's a simplicity to notes once you understand the very fundamentals of them, and then you start to tag on that creative aspects of it, and it really, you're right. I mean, it can solve so many different problems, and
Mm.
at the end of the day, whether you're investing in real estate, mobile homes, self-storage or notes, you make your money by solving problems. I mean,
Yes,
that's really what it comes down to. So identify the problems, come up with a good solution and be there for it. And that's where the money is made. So overall, great opportunities in all aspects of real estate. But I agree with you. Creating paper, holding paper, trading paper, all is just a big part of it. And any real estate investor who's not paying attention to that, you're really just leaving money and opportunity on the table.
that's for sure. We even have notes on self-storage. We have four of them right now, and
Mhm.
they're doing great.
Yeah,
They've been very consistent. See,
yeah,
that's the difference between having the note or owning so you have control of the um of the unit without having any of the responsibility. You have control of the deal without having any of the responsibility because you're getting a monthly payment on it,
right,
right?
right. It's the way to go.
Yeah, buddy.
Excellent. What was that website again?
It's carolinahardmoney.com.
carolinahardmoney.com. Go check that out. She's got videos and everything else on there as well, so you can see how that works. But if you're in the Southeast and you're looking for money, single family homes, as she said, up to 4 units, you're looking at manufactured mobile homes. Please go check out carolinahardmoney.com. And Wendy, a pleasure to see you again.
Hey,
And
can I also
thank
tell
you
you
for being
about a
on. Sure.
group that I lead? So on
Oh, yeah.
Friday mornings at 7:30 a.m. on Zoom, I lead a group called Sunrisers, SON. It's a faith-based real estate group, and it's free. And I'd love for any of your crew, anybody who's seeing this, to come and join us. We spend about 30 minutes doing a devotional, and then we talk about real estate for an hour. And it's all kinds of real estate,
Awesome.
including notes,
And that was every Friday morning, you said?
every Friday morning at
Right.
7:30.
Friday morning.
Friday morning at 7:30. Very good. And
Yeah.
we'll have that posted in on the videos and such as well, everybody. So please check that out. Wendy, once again, thank you so much for being
Thank
on.
you.
Dwayne, thanks for being on here as well and getting Wendy on the show. Do
Thank
appreciate
you.
Yeah,
it. And thank you,
absolutely.
everybody, for listening. And hope you enjoyed it once again. Please give us a nice rating and review. Please subscribe and go ahead and pass the information along so we can increase our viewership and probably build more podcasts for you in the very near future. So thanks again, everybody, for listening. And again, if you want to watch the video, check out the YouTube channel. Just look up my name.